What's up, sons? It's Blind Rod with Son of a Tech once again, and welcome back to yet another Talking Head video. It's Friday, September 24th, and if you're watching this in the future, you know exactly what we're going to be talking about today. If you're watching right now and you aren't aware, there's been a dip in the market for Bitcoin, and it appears to be directly related to the outlawing of all crypto transactions in China. Of course, we're going to get into the details as far as even some speculation surrounding the real estate market in China, according to Ars Technica, right after a word from our sponsor. Today's sponsor is myself. To support the channel, click the join button below the video and you will get access to our privately hosted Rocket Chat. Selecting the $1.99 option will get you access, and after that, you need to head over to the membership tab, scroll down, and expand out your membership perks. Find the section for connecting on social media, and in that section there will be a secret registration URL to join Rocket Chat, where you can sign up to enjoy talking with other cryptocurrency enthusiasts and miners without spammers, scammers, or bots. Welcome back. So the original article, or the way I found out about this particular situation with China banning cryptocurrency, was on the Daily Beast. And if we hop into the article here, you can see that it states basically in the title that China outlaws all crypto transactions and Bitcoin mining. This is written by Rachel Olding, and who is the breaking news editor. So the article is very short and sweet. It says, in a bombshell move that sent the value of Bitcoin tanking Friday, China outlawed all cryptocurrency transactions and issued a national ban on crypto mining, the energy-intensive process of creating new bitcoins. China's crackdown is fueled by concerns that crypto attracts money laundering and fraud, and that crypto mining uses up so much power it will dent the nation's efforts to cut greenhouse gas emissions. China has the most crypto miners in the world, but few speculators given its increasingly strict regulations. In early trading Friday, Bitcoin's value dropped more than 7% on the news. We've had larger swings just from the wind blowing differently in cryptocurrency than 7%. So if you guys are worried about the 7% drop, I don't know that I'd be worried about it too much. Should we be worried about maybe a little bit further down the line as this starts getting enforced, the dip of cryptocurrency continues further? Possibly. That would probably be more likely. Remember, we had this thing earlier this year where basically the Chinese government was talking about banning cryptocurrency mining. We didn't see it right away. The power was still being shown on the charts as being from China, and it took a while before the restrictions actually hit and miners started getting shut off. I presume nothing is different here. There may be a little bit of, speculation right here with that 7% dip, but the realization of this effect on cryptocurrency and the price of it, I don't think has, come about or come to pass yet. So keep in mind that we probably will see how this actually affects the market here in the future, not necessarily today, is going to be, the take home for you guys. So obviously what we've heard from China and the government is that it's power intensive and criminals use it. The same old arguments we've heard about cryptocurrency in the past all over the place. And my arguments against that are the same arguments that have lost, I guess, every single libertarian argument in the past decade. And that would be just because it's used for something bad doesn't mean that you should take that right away from the people. Now, China's a little bit different because they don't have the rights that we have in the United States. However, the right to, some financial freedom here that is provided by cryptocurrency is going to be a point of contention as it starts getting regulated more and more heavily. And what we need to keep in mind is that the original intent of Bitcoin in particular, that kind of comes over into the rest of cryptocurrency, is that it's supposed to be a peer-to-peer system that eliminates third parties such as banks and governments. So Obviously, banks and governments aren't going to like it. This is kind of expected. The reasoning is a little bit of a false flag in my humble opinion. I don't think that it is because it's being used for illegal activities or because the energy is so high, because as we've seen in the past as well, the energy consumption of traditional banking systems way outweighs any of the cryptocurrency mining power consumption as it currently sits. So it's kind of a silly argument to say that it uses a lot of power when the banking system uses more. So let's go ahead and talk about some of the reasons why this may be happening right now and the real reasons behind it, at least according to an article by Ars Technica that I found pretty interesting. So this article, written by Tim DeChamp at 11:11 a.m. today on the 24th of September 2021, reads, Bitcoin outlawed in China as country bans all cryptocurrency transactions. What we want to take a look at here in particular is this domino effect, where Tim DeChamp here points out that real estate represents almost a third of China's gross domestic product, and developers have borrowed heavily to ride the wave. But in recent years, the Chinese Communist Party has turned on the sector after President Xi Jinping, if I said that correct, I hope I did, said in 2017 that houses are for living in, not for speculation. This type of rhetoric is going to get very popular, I think, even in Western countries, and it's going to be the idea of not owning any property. They'll use it as a guise, probably in terminologies like this, like saying houses are for living in and not for speculation. It's a little disingenuous because what it's saying is, or at least what the poorer classes will see it as is, oh yeah, that makes sense. It's just to live in. These people shouldn't be buying and selling property to make money off of it, right? But what it's really saying is that they don't want anybody to own said property. And this is kind of a sneaky way of saying that. And the reason they don't want people to own it is because if somebody owns a piece of property, outside of taxing that piece of property, it's hard to generate revenue on, right? So there is this, I guess, idea that eventually the lower classes will essentially always be having to pay for somewhere to live. This seems like kind of a sneaky way of saying that. And while you may agree with it on the face of it, you need to see what the intentions are behind it. Just kind of a quick note, because I thought that was a really interesting statement. So Xi may not simply be motivated by ideology here, as migration to cities has slowed and birth rates have fallen. The country has become riddled with unfinished or unoccupied housing. The Rhodium Group estimates that the market's excess could house as many as 90 million people. Local governments have slowed land sales substantially, down 90% year over year. Since they rely on land sales for about a third of their revenues, the loss could have a domino effect, reducing local governments' abilities to repay the $8.4 trillion in debt they've issued. In August, Beijing attempted to further rein in the sector, demanding that developers lower the ratio of debt they hold to assets they own. Real estate companies are often highly leveraged, selling debt to build and market developments, relying on sales to pay down that debt. The nation's second largest developer, Evergrande, has been caught flat-footed by the Communist Party's new demands. Before the decree, it was already in trouble as property sales have slowed. Evergrande hasn't been able to generate the cash required to finish projects, and without finishing those projects, it wasn't generating cash to pay interest and principal on its outstanding debts. The government has prevented Evergrande from issuing new bonds to pay off its near-term debt, and the company now runs a very real risk of default. Some observers are comparing the Evergrande crisis to Lehman Brothers, the American brokerage firm that went belly up in 2008 at the outset of the subprime mortgage crisis. Others don't think that the Community Party will allow an Evergrande default to create the same ripple effect, but the investors are nonetheless spooked. If Evergrande's woes do send shockwaves through the Chinese economy, investors may attempt to move their money elsewhere out of China. So this is how it affects, and this is important because that's basically the basis for, or the foundation of the argument for this affecting, of course, China's policy on cryptocurrency. And it makes a lot of sense here. So capital outflows. All of that brings us to where the continued cryptocurrency crackdown comes in. The Chinese government has long restricted the flow of capital outside the country, preferring that investors keep it circulating within the nation's economy. But cryptocurrencies are more challenging to control given their somewhat anonymous nature and the relative ease with which they can be converted into other countries' currencies. The crypto crackdown in China is not just because Bitcoin mining has been drawing too much power, which it had been, is according to Ars Technica, or because it was commonly used in illicit transactions, which it was, but we've talked about that as well. It's because the Chinese government likely recognizes the risks posed by an over-leveraged real estate sector, and it's attempting to limit the fallout when the correction comes. Cryptocurrencies are simply caught in the crossfire. So this is really important. We've talked about this before. We've talked about what is cryptocurrency. Should you be purchasing it in hopes to increase, of course, your net wealth or net income, blah, blah, blah. And the answer to that is really no. What it's there for is to protect from these exact situations. When and why Bitcoin was created is that subprime mortgage crisis that happened in the US in 2008, more than likely, as if you look at the white paper for Bitcoin, appears to be directly impacted by that. Bitcoin in particular is a store of value to protect, of course, the individual against the inflation of fiat currencies. And if you are about to have a real estate crisis that affects and sends ripples through your economy, you can't have an easy way for the public or the individual to protect themselves from the bad decisions of the government and the banking systems. Because if you have that, then the individual doesn't have the incentives to basically continue to participate within your particular fiat currency. So the reason Bitcoin was created is exactly how it's being used and exactly why we are seeing so much regulation and exactly why we are seeing it getting banned in China, which means Bitcoin works. That's the moral of the story at the end of the day. Bitcoin works. Thanks for watching. Be sure to leave a like, comment, subscribe down below, and I will see you next Tuesday. If you enjoyed this video, be sure to subscribe to see more. Also, you can check out this playlist for more content talking about cryptocurrency.